Hey guys, Mark Robinson here. Welcome to another episode of Wealth Rewired. I am your host. I am doing it solo again. My beautiful wife is out doing some incredible Reiki sessions with our Vault members, and I know they're getting a very special time right now. So I thought I'd smash out a couple of episodes because I really want to talk about the things that we never really want to talk about, right? I'm going to be talking about when we pass on. Yeah. So I'm going to break it up into two episodes. This one here is going to be all about the types of insurances. Right, I'm a massive fan of insurances, guys. I'm going to show you what you can do to make sure that you work out exactly what you can afford to lose and insure yourself for the difference. And the reason being is because I truly believe, what's the point of bringing all this wealth or creating all this wealth if you're just going to sell it if something bad happens? Yeah. So we're going to work it all out, go through just my thoughts, right? Just opinion. Now, I am talking, insurance products are, what they call a financial product. So I want to be very clear. I am only giving you opinion. I'm not giving you advice. You do need to seek a licensed financial advisor who is qualified to give you advice around insurance products and stuff, right? So please note, if you don't accept or agree with that, then you need to literally just stop listening now, bugger off, and join us on the next one. Alrighty. Also, another warning, guys, is this is a topic that's not that nice to talk about, right? But it's very important that we do. And look, when I was a licensed financial advisor, I always used to, I always hoped that we would have an argument every year when we do our reviews about why you had the insurances rather than trying to explain to your family as to why you didn't. Yeah, and it's a different conversation. And unfortunately, I've had both conversations. Yeah, and I can promise you, I know which one was the far easiest one to have. In fact, probably one of the um, most I don't know, powerful hugs I've ever had in my life was after the funeral of my one of our clients. You know, the husband came up to me, gave me a massive hug, and he basically said, Mark, if you hadn't, and this was his words, so if you hadn't convinced us to have these insurances, I'd be selling the house right now, and my three kids and myself, we wouldn't know where to live, right? So he had the power to, keep us stability in the family and what have you. Yeah. So it was a powerful moment, and that's why I've always been very, very, very bullish, I should say, but very strong opinionated on insurances. Yeah. So let's have a look at the insurances that I'm talking about. We can loop in things like car insurance and contents insurance, but what I'm talking about is the stuff that goes around the physical, right? Around who we are and what we do. And I sort of group them into the four main categories, right? There's life insurance, there's total and permanent disability, there's trauma insurance, and there's income protection. Yeah. So you can sort of lump them into the what if I die, what if I don't die insurances. All right. So we're going to run through those scenarios now. So obviously the what if I die insurance, that's life insurance, right? And it's the complete opposite, right? Is it ironic? I'm not sure, right? But it's the complete opposite of it's death insurance because you can't collect it while you're alive. It's on your passing. Yeah. So that's the what if I die insurance. The what if I don't die insurances are the actual other three, right? The total and permanent disablement. We are looking at the trauma and the income protection, right? And so that's right. What if I die? What if I don't die insurances? Now, which ones do you need? Pretty simple, really. My opinion. Okay. The financial planning industry guys, we had formulas that we had to work out, and I would have to recommend you those formulas, right? Now, if I didn't recommend you those formulas and I just sort of told you what I felt you needed, um, you could basically sue me, right? If something happened and blah blah blah, and that's one of the reasons why I got out of the space, right? Is if you can go after somebody for giving the right advice, right, suited for you. One, I don't think you're the right person anyway, but two, I just don't think that's cricket either. Yeah. So back on track. Let's look at if you're single, right? No kids, no debt, no dependents, no nothing. you don't need life insurance. Okay, you're dead. No one cares. Yeah, no, I'm kidding, guys. I told you I'd do the odd joke, right? Everybody cares, and please make sure that you do that, right? We genuinely care. Your mum will care at the bare minimum, yeah. Right, but don't. And I know this sounds weird, unless you genuinely want to leave some monetary value to the cat society, your fishing club, the cricket club, your mum, or your dad, I shouldn't be so hard on us dads, then you really don't need life insurance, right? You need to be more around the what if I don't die insurances, right? The total and disability and the income protection and the trauma, right? Now, here's the funny thing about trauma, right? And I'm just going to talk about this one off because, you'll decide whether you want trauma or not. But trauma basically covers heart attacks, cancers, or strokes. Yeah, they were the main three ones. If it's changed again, right, it's been a while since I've been out of the industry, but they were the three main ones, right? Heart attacks, cancers, or strokes. The bizarre thing about trauma, I did very little trauma insurance, right? And stuff. And because, it's I'm not going to say it's a fact, right? Because I'd have to truly say that. But my opinion was heart attacks, cancers, or strokes come down to lifestyle choices more than anything, right? And this is pre 2020, guys. Let's not go there, okay? This is pre 2020. Yep, shit's happened and people were just dropping dead fucking for some unknown reason, right? But yeah, let's not go down that track, right? Heart attack, cancers, or strokes, yeah? So what I would find is unless you were sort of overweight or you drank much or you smoked or blah, 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 or you had a history, a family history, your dad had a stroke or your dad had cancer or your mum and that, whatever it is, then, you probably could get away with having trauma. Yeah, because out of all of it, it's the most expensive, right? I think it was like 1 in 5 females and 1 of 3 males at the time would get one of those conditions, right? So hence it being quite expensive. So the one to me was always non-negotiable was your income protection, right? And you can look to reduce the expense of income protection by, having some rainy day money sitting there so that if you can't work for, say, 3 months, right, then you would have your insurance policy kick in after 3 months, right? And if you could do 6 months, it was even cheaper. If you could do 9 months, it was even cheaper still. Yeah, so that's how insurances work, right? So, oh, and the other thing too, if you smoked, your premium was twice as expensive, right? If you're overweight, it was twice as expensive. So, but if you stopped smoking for exactly 12 months, we could literally give you, 100% or 50% discount, right? So there are ways if you lose weight, you can get it adjusted accordingly. Yeah. So you're single, no debt, no nothing. You need, in my opinion, absolute bare minimum income protection. And then maybe the total TPD, total permanent disablement. Yeah. The weird thing about TPD, quite often you couldn't get that as a standalone product. You had to have some life component to it now. Life component. I think they've changed it a bit now. All right. Now, so you're a double income, no kids, no debt. Same deal, guys, right? I genuinely believe you don't need the life insurance, right? You just need the income protection as a bare minimum, right? Maybe the TPD as well. Okay, double income, no kids, and some debt, right? And it's joint debt, yeah? Here's the thing, again, only my opinion, right? I genuinely believe all you have to do is work out what your partner can afford without you and insure yourself for the difference. So if you're building up a pretty good portfolio, you got $2 million worth of assets, you owe $1 million, and your partner could afford, the mortgage to be 600 grand, then in reality, even though you owe $1 million, you only really need to insure yourself for about 400 because the surviving partner can afford 600 grand. Yeah. Now, if the other partner couldn't afford anything, right, and if you pass, then you would need the full $1 million on their policy or your policy. Yeah. So making sense, guys? Because when you dig down here and you get the quotes and stuff, it's fucking expensive, right, to get it up there. Yeah. Alrighty, so double income with kids, right? Single with kids, double income with kids, married, not married, doesn't matter. If your kids are under 18, you need the what if I die and what if I don't die insurances. Yeah, you've got to balance those two up because you want to set, it's not about setting up the surviving partner. It's about what sort of lifestyle do you want your kids to have right while you're gone. And we can have conversations about who ends up with the money or, who lives off the income and stuff to provide that because, your partner, well, mate, yeah, I know my wife could easily do better, right? I'm punching way above my weight. So, but, as our kids were growing up, I wanted to make sure that, if something happened, that not only my beautiful wife was looked after, but also she could look after my kids, yeah, our kids, right? Yeah, there are structures you can put in place where, the new partner, if there's a new partner, comes in, that they don't get to access to it all, and your ultimate is the benefit is your kids, yeah. So those are the sort of things I want to look at, yeah. And if you've got blended families and all that sort of stuff, guys, that's another conversation we can have, which about around estate planning and testamentary trusts and everything like that. But what I'm talking about right now is just the sheer fact of hey, insurances are important. I believe they are literally a fact of life. Until you get to a point where your net worth is a certain point and your portfolio income covers a fair chunk, right? Either all your income or not, then you need to have these things in place, right? And they should be non-negotiable. Yeah. This is just my opinion, team. Yeah. So, hey, not a good topic to start to go on, right? But it is absolutely important, right? And I will gladly debate you, right? The pros and cons of not having it, all that sort of stuff, right? Because I am a true believer in it, yeah. And I don't even get paid selling it anymore, right? All right, guys. Hey, if you like this video, feel free to share it with your friends and family, especially if you know someone who would benefit from, just having this conversation around this topic. In the next episode, we have this great little booklet. We do this event called Off the Record, right? And there's no cameras, no phones, just absolute truth. And we give it, share amazing stuff over, about I think it's about an 8-9 hour day, right? But this one here, I'm going to talk about, this is our workbook, and this is the one that we do in the morning. So in the next episode, I'm going to run through what this is, right? If you're watching, maybe you guys can scan and, follow us on Facebook or book a call. We may make this available down the track, guys. It is pretty important. It does come with a couple of visualizations, which I'll sort of briefly share about them, which makes it even more powerful, and go from there. So if you do like it, guys, watch out for that next episode. It's the last in the series and the legacy side of things. I know it's not really a series. I've just done two ones, but we'll get back into, more fun stuff, but it's this stuff that really, really matters. Bye for now.